Hi, good morning, everybody. Today is November 10th. I want to make sure everybody can hear me okay. I wanted to go and talk about a couple of different things that, when you guys are brand new to our software, this is really going to be our focus today. There's a lot of work that you have to get through, but I wanted to show you a quick trick to help you maybe go through this a little bit quicker. So the first two things that we're going to really be contending with during this lesson is the syllabus and the trading plan. And when you go through the educational syllabus, one of the things that we have on here, again, obviously the education page, and we have a resources link. If you would like a complete list of all of the resources that Nexgen offers, whenever you're clicking on PDFs from the website, right click on a link and open it in a new tab. This complete list of educational resources will give you literally all the education page, the syllabus, the user guide, the trading plan, videos for specific topics. If you're a new trader, if you want more divergence work, if you want trading plan rules, videos, class reviews, more class reviews, spreadsheet links. If you're getting NinjaTrader and you want a link to lease and purchase options for NinjaTrader, if you want to know how to clean out your workspaces and data and templates, here's a how-to guide. If you want to know how to capture pictures and what programs to do it with, a link to our YouTube page. Some of you want to connect cryptocurrencies or stocks to NinjaTrader, so I put together a few connection guides for you. And then ultimately, maximizing and cleaning your computer, I put some links on there for you as well. So a lot of information just on this one link inside of the syllabus. Now, two things I want to do. I just wanted to go through step number 1 in the syllabus, and you're going to start this during your demo, but realistically this is going to take you several weeks probably to complete. But I wanted to show you how to actually do step number 1, and we're going to kind of reverse engineer it, if you will, today. A lot of clients do it this way, and when I say this way, I'm talking about they learn trade setups, right? Like when you go to our trading plan and you look at a buy look, and you spend a lot of time focusing on a trade setup look, but we're going to do it a little bit differently today. Not that we won't look at trade setup looks, and again, these are your trade setups, and the chart should pretty much look like one of these when you're doing a trade setup. So you can study those. Where I want to focus in today, which I think is going to be super, super valuable for everybody, we're going to do it backwards. And what I mean by backwards is we're going to look at when you should stop taking trades. And I know that sounds a little bit goofy because it's like, why should I learn when not to take a trade first before I learn the trading rules? And again, what we're going to do is we're going to go through, and I'm going to do a study session the exact same way. Hopefully you as a new user will do the study session. So I just wanted to open up a couple of these pictures first, just so we can have these pictures and you can see what they are and you can understand what they are. And again, these are what we call termination conditions. And termination conditions means that it's a condition that may very well stop the market from trending in one direction or the other. So when you're looking at your 2-chart setup, 14-2 chart on the left, 5-1 chart on the right, we spend a lot of time looking at Fibonacci areas and trigger lines. And this is a very powerful condition. Very weak triggers, meaning the small triggers are inside of the large chart, in combination with multiple divergences at the edge of fibs. And the general consensus is when you look at a chart, if the triggers are weak and you have divergence from a fib, you're going to stop taking long trades. Everybody okay with that? Pretty straightforward. It's just a rule that says, hey, if you have divergence from fibs and the triggers aren't strong, wait for the fib to change colors. And if it never changes colors, then it's going to be a top. What we're going to do today is we're going to go back in history and we're going to find a lot of our termination conditions. And instead of teaching you trading rules, we're going to reverse engineer a top or a bottom. So we're going to find the termination condition first, and then after the termination condition, we're going to look for one of our trading rules, either longs or shorts or whatever the case is. I think this is going to be, and it's not different education, and I'm not making up anything new. I'm just going about it in a different way. So the concept's going to be quite simple. And again, look, this is an example where we'd have weak triggers on the large chart with multiple divergences from fibs on the small chart, and we would stop doing short trades, which is great, right? We know when to stop doing short trades unless the Fibonacci turns red. However, what we're going to look for after this condition is this setup. So we're not, and again, and when we go through the video, when you go through the video that's on our, this video, trend trade video right here, one of the pictures and one of the things that we talk about in that video is the fact that you don't have to try to buy the top or the bottom. And let me show you a little snapshot of that picture. I got to bring the room down here. So the idea is that you don't have to buy the high or low. You have to recognize that the high or low was right, and then you're going to buy or sell the subsequent rolling of the triggers. So we're going to turn your trading into a hunt and search for the right trade into more of a termination condition followed by trigger lines rolling, and then we're going to go dig out the rules for this trade or this trade. And again, this is going to slow you down a little bit in the beginning, right? When you're looking for a termination condition, and then you're waiting patiently for the triggers to roll. And the hope is, and what you'll find and what we have found, and I think everybody who's had our software for 150 years will agree, that, look, this was a picture from yesterday. And I want to give you an example of what we're going to do so you can see it. So this was a potential top that was made, but it wasn't a great top. And the meaning of not great is quite simple. Right? We didn't hit the fibs, we don't have divergence, we didn't have a pivot stop out, and even though the triggers rolled down a little bit and you're going to see a trade in here, it's not really that great. And then you're going to have what we call a great top. And again, this is a term that we're going to use for fib areas that hold with weak triggers, or fibs with divergence, or pivot stop outs at fibs, any of our termination conditions, which we'll go through. And you're still not trying to find a trade in this area. So I want to be clear on that, okay? You're not trying to find a trade, you're trying to find and validate that you had a great top in place. And then the next trade that happens after that, whatever it is, again, look, let me show you back and forth, and we'll go back through charts and do this. Not a great top, okay? And then the trade that happens, right, some people would say, with double divergence and some type of a trend trade look on a small chart, they would try to take a trade. And these are the ones that have a tendency in a not great short after a not great top. This is where divergence usually will end that medium probability to lower probability trend trade. Does that make sense? And then when you actually make a great top on the large chart, you have a much higher chance of really great trades after this. And, again, the idea would be to get in right here, but there wasn't a pullback. So ultimately, this one did get filled yesterday. And if you guys saw the market, this only went for about 30 points to the downside. So it was a huge trade. So again, just to recap what we're going to do, we're going to talk about termination conditions like hitting fibs or pivot stop outs or fibs with divergence or fibs with weak triggers. And then we're going to go find the next trend trade that meets the rules. Does that make sense? And what that's going to do is it's going to, instead of you just randomly looking through your chart hoping that you find a great trade, it's going to focus your attention on finding the termination condition and then the subsequent trade. Look, let me give you a live example right now. Okay, so this is crude oil. And this is exactly what we would be talking about right here. Notice down here at the bottom we have 52 Fibonacci supports. Very, very strong Fibonacci support. Right? I think everybody can agree to that. And the idea is that we're not buying the support. What we're going to try to buy is after the triggers roll up one of these two spots so we can make more money after a good bottom is in place. Does that make sense? So we're not trying to trade the bottom per se. We're going to be doing this. Let me pull the other chart over here so you can kind of see them both side by side. And again, look, this is a very stereotypical bottom for us. Remember, we already just looked at this pattern. A pivot stop out with multiple divergences from the edge of fibs. And again, the temptation for a lot of newer traders, once they recognize this pattern, is to trade against the trend. And you could see how tempting that would be, right? And again, I don't want you trading against the trend ultimately in the beginning until you've got so much experience you can say 1,000% for sure that's the right trade. The trade that I want you to do, and if you notice, look, the circles that I drew over here on the larger chart are a function of the trigger lines. So look, let's just memorize this, guys, because you're going to see it. Look, fibs hold, trigger lines roll. So, and again, you see the same thing kind of up at the top. Fibs hold, and then the trigger lines roll. And you guys all have this template. You can do this. You don't have to. The idea is that you have to look through the indicators and see what your triggers are doing after the bottom holds. So what I've done is I've eliminated the Fibonacci support and resistance so there's no confusion. Everybody okay with that? And again, you have to know what the termination conditions are so you can say absolutely unequivocally this is going to be a great bottom in place. And when I say in place, I mean great bottom and both trigger lines have rolled to the upside. So I want to make sure terminology-wise we're talking about the same thing. Great bottom in place and then subsequent trigger line rolls. Now you don't need all the trigger lines to roll to get a trade. Sometimes you can get a trade a lot lower down here. It just depends on the small charts. But the number one thing that we're going to be looking for is a great bottom in place. And when we get it, right? So we've declared that we have a great bottom. That's a nice thing, sure. Okay. Now, where's the money? Right? Show me the money. Right? So, again, if we had an opportunity right here where the fibs and triggers come together, then sure, we would have had, a first attempt at a trade. Now, unfortunately, sometimes you get it, sometimes you don't. And again, this is where you all will have the opportunity a little bit later to be able to buy Fibonacci support, mid bands with the trigger lines, and really be able to cash in on the idea or the trade setup that we teach you guys with the fibs and triggers. So again, I'm kind of backwards engineering it. Again, look, this is the trade setup from the trading plan. strong triggers by Fibonacci support with the strong triggers above the other triggers. Everybody understands this trade, right? I think it's pretty straightforward. It's really easy to see when you see it in the live market. But when you see it after a great top or a bottom and you see it, then you go back and look at it and you're like, wow, okay, that's that trade. And it was after a great bottom was in place, which makes it even better for me, a better chance that we're going to get some follow through from Fibonacci support up to Fibonacci resistance or beyond. So we're going to kind of reverse engineer the day, if you guys don't mind. I think it's going to be a good way to go. So let's go through again these termination conditions. So you have to know them, and you have to know them by heart, and you have to be able to instantly recognize them. Now, I say instantly recognize them, but you don't have to be super fast with this because you're not really doing a trade up here, right? Maybe later as a more experienced user of the software, you may take an attempt at a counter trend trade. But for now, what we want to do is recognize the condition and then the subsequent rolling of our triggers on the smaller chart or the larger chart to get us a trade. All right, now, again, termination conditions. James, your question is, you're doing a trade getting out? No. I mean, technically, yes. If you were long and you got to this condition, you would be out of your position. But what we're doing is, instead of looking for the long first, we're looking for the end of the trade and then the subsequent either breaking of the area or rolling of the triggers. An exit is always the same, James. You're either going to get stopped out or you're going to hit a profit target. That's it. There's only two options for getting out of a position. You're either stopped out or you hit a profit target. There's very little else. So exiting will be the easiest thing you're ever going to do. Have no fear. So again, look, again, sometimes termination conditions start off as a fib area that may hold, but then eventually if the fibs break, we're going to continue trading with the trend. So we're going to treat a breakout the same way we're going to treat an area holding and rolling. Okay? Both of these situations are going to give us the next trade high probability. So again, look on the right down here. Do you see it over here? Inside this yellow box, we had a divergence and a blue fib and a little pivot stop out. That's the termination condition. And then any trade that we find on the small chart after that termination condition is going to be a trade we're looking for. Everybody all right with that? Pretty straightforward. Now, again, look, this is a very good visual, right? I mean, obviously, if you're going long where this white circle is with the strong triggers, you're going to be, that's a pretty easy look. One of our termination conditions is multiple fibs with yellow dots, right? The one-to-ones. So this would also be a condition that if it gets hit and the small chart then gives us a trade, we'll look for a trade. You may not see the trade on the big chart right away, but you can see it on the small chart. And this is also written in our trading plan. Again, I want you to understand where this is in our trading plan. If we have fibs and triggers agree for a trade at a top or a bottom, then we're going to look for, or a strong breakout, one or the other. So in the trading plan, trade number 2, which look, this will become intuitive when you learn the termination conditions. But you can't understand this trade until you understand why the market is supposed to stop. Does that make sense? So you have to have a termination condition on both large and small charts. And then look, here's the example of the trade setup. And you'll see very similar things almost every single time. Very weak triggers on the 14.2. In addition, you have 1, 2, 3 divergences on your small chart, which is a termination potential for both charts. And you're not going to trade right away until at least the small chart has fibs and triggers that agree, or the large chart has a complete roll of the triggers, and then you'll take another one. So you might get an early trade at the edge, and then it might be a trade that comes a little bit later. And again, that's what happened here. You know, this was a good example of that. We had an edge, which is really a good edge, but if you look at the real world, right? So here was that same edge. We never got the first attempt at a short. But we would have taken it if there was a pullback. That's something that you should be taking. It meets the rules. Now it didn't, and then the large chart triggers were really strong, and we broke a fib, and this is the example of, breaking support with strong triggers. You're going to sell, again, after a great top or a break of a fib with really strong triggers. We're going to do another one. Everybody okay with that? And again, this is, look, sometimes you get this trade right here and sometimes you don't. So this is an example of actually getting that trade, but you have to be super confident that these termination conditions are right, and it's going to make you very confident taking this trade to the short side. As we go forward, let me go through termination conditions. Again, look, a break, we're going to keep going. If you have a pivot stop out and a termination condition, we're going to find a quick entry. If we have a major fib high with 1-to-1s, we're going to look for a quicker entry on the smaller chart. If we have a pivot stop out of divergence from a fib, if there's a quicker entry, great. If not, after the triggers roll, either way. This is an example of trade you shouldn't be doing. And again, this is the 1-to-1, the yellow dots. A lot of people ask this question. It's just A to B swing, and then if you take the low, it projects out 100%. So we call 100% Fibonacci alternate projection, because you're taking this distance and alternating it to the next low pivot. So this is one of our termination spots. And again, look, this is a good example of a trade you won't take because of a large chart pivot stop out termination condition. And again, when you take those, you lose them, and what we're going to be looking for is going the other way. So let's take a look at our charts, and again, we can start with today. We'll go back a few days, but I wanted you to kind of see the difference. Because, again, look, overnight, just to give you a little bit of perspective, and yesterday afternoon, let's look at it yesterday. This was that spot yesterday that we said was a really good top. So these are the live charts now, not pictures, okay? And I don't think it's very difficult to see. Look, this was a really good bottom. Divergence from fibs with the triggers going up. And then this is a really good top. Fibs with divergence and triggers not passing it, right? And ultimately, this was the trade setup right here. And, when you're going in and you're doing a trade, this is what it looked like yesterday when we were putting the order in. We recognized a good top, we recognized a break of a fib, and then you recognize the trade setup becomes very, very, very obvious. So again, look, the market goes down and the triggers get weak, which is very common. And then they run up, and we have, this pattern happens a lot where they don't quite finish a move down to a Fibonacci area. And it's during this weak trigger right here when we get divergence, usually the market will go back up and retest the high. And, where the easier money comes from is not at the high. right? We expect the high to hold, but what we're waiting for is for the trigger lines to roll, and then you find some type of an opportunity to get the rest of your move. So the concept is fibs break, take a trade if the triggers are strong. Or if a top or bottom holds, then after the triggers roll, you can take a trade. And then there was more trades, believe it or not, right? Because you never know if they're going to hold or break. So just like our termination condition, right? Again, you can see kind of the easy look for trades, right? Once we get to fibs, we have to read our fibs and triggers. And if the triggers get passed, guess what happens? You already know what happens, right? We take another short trade if we get an opportunity to go short. And essentially, we just repeat this process over and over. And, it happened one more time yesterday where, there was another break of the fib. It was a big sell-off yesterday afternoon. And then there was one more really good top, and then you had another pretty easy trend trade short after that. And again, it doesn't always go all the way the first time, right? So many times when the triggers come together, right, and they start getting inside of each other, we make a bigger pullback, and then ultimately, usually from a little higher spot, they'll go finish their business. And then we make it down to fibs with divergence, and you end up with what's a really good bottom. Anytime you get divergence and fibs at the same spot, it creates a really good bottom. And hopefully by now, just even in a couple of minutes, you don't even need me to point the trade out to you, do you? The fact that we had fibs with divergence at the bottom tells us something. But I bet you can see where the trade is, can't you? Either here or here. Now we got to go look at the smaller charts to find them. But does everybody understand the concept? Determining a good top or bottom, and then the subsequent trades. And again, look, I'll go back days and days and days. We can do this. So bear with me a second. I'll spread my chart out. This is what I want you to do. I already know this stuff. The people who've had software for a long time know this stuff. So it's vitally important that you, as an end user, can learn this. And again, look, I went back to 1020 randomly. I don't have an agenda. I can pick any day you guys want. This happens every day. Just in the last few days, there's been so many trades that, it's really a lot of opportunities with a simple method, right? Not trying to do too much. And let me do this. I'll put a global crosshair on so we can have our charts line up with one another. All right, so the idea is that we're going to have, again, tell me if this is a good idea or not. Multiple time frame fibs, and if they hold, then we'll look for the next trade going the other way. And as long as we get something that fits the plan, then we'll end up with a trade setup. So after it holds, we're looking for shorts. Now, you can already see the result of what happened, right? So it's not like I'm trying to trick you or anything. What I'm trying to do is get you to quit looking for trades and instead looking for terminations or breakouts. Does that make sense? Because, again, look, I'm going to mark boxes, if you don't mind, and then we'll go look at our smaller chart after the fact, okay? So I want you guys to question me if you have a question. This is a good top because not only did we have the edge of the fibs hold, but the triggers rolled. And then, again, look, we had a pretty good bottom right down here because we got within maybe, 2 ticks of multiple time frame fibs. And the trigger lines are very, very weak. And again, look, as we reach fibs, right, we get to fibs, but the triggers don't roll. So I want you to see what happens. Fib support holds, and then we end up with these opportunities for going long. And the market will do this a lot. It'll come back a lot lower, and then you'll end up with a good bottom. And I want you guys to stop me immediately if this doesn't make sense. Why is this a good bottom? Because we have fib support that holds, and the trigger lines say it should hold. And we're not going to try to find a trade at the box, okay? We're going to try to find our trade after the box on the small chart. So what I wanted to do was draw boxes first, and then we'll go back and find trades. Is that a fair way of doing it? So once we know it's a bottom or know it's a top, we're going to have a more solid way of, and again, look, short term, this is a pretty good top. The fibs hold, and, you know, again, it's very short-lived because the triggers are still really, really strong. Short term, it's a good top, but so is the mid-band. The mid-band is even better because the triggers are going up and they're on top of each other. And again, when the triggers are up and on top of each other, you're not really going to take short trades. It's just not going to happen. It has to be really weak or, you know, something pretty significant. Now, this would constitute a breakout. Everybody agree? So after this happens, we've got a breakout to the upside. And whenever we get a breakout to the upside, we're going to end up looking for a long trade, which I think everybody can pretty much see, right? I don't even think I have to point it out to you, but you can probably see it. Then we do, you know, look, we overran the fibs a little bit, and we had really weak triggers and fibs and one-to-ones, and the fibs didn't change colors. This happens a lot at the tops or bottoms. They start going up, and yes, you will do a trade initially, okay, when it starts to break through. So you will do a trade initially, but you're going to have to be aware that the fib didn't turn blue. It's still red. Everybody see that? So after it turns, we end up with a really good top. And then as we start to work our way down, we do the same process in reverse, right? This is a really good edge of Fibonacci resistance. Does everybody understand why? And again, I wanted it to be fib and trigger line reading, right? This is fib resistance, and these triggers, the smalls way below the large, suggest that this top could potentially hold and that this bottom could actually break because the small triggers are past it. And as such, you can see obviously what the results of a potentially good top are. And, you know, again, you can go through and I invite you to do a month or two's worth of research on this, because once you get it and you see it, it will become pretty obvious to you. Now, this is where, again, look, one tick from a fib, give or take, right? I know everybody wants it to be perfect, but yellow one-to-ones, fibs, that's a pretty good bottom, yes? Short term. And you don't know it's a bottom until sometimes after it turns. So I bet you can already see the trade, can't you? You'll start to see them, they'll pop out to you automatically. You'll start to see, once you focus in on a top or a bottom, and then what happens after, you're going to start really seeing the money very clearly. All right, now as we go up, right, again, we break out, and this is, you know, there's a lot of breaking out in here, but, you know, short version is somewhere in there, there's probably a long trade. But again, keep in mind, the bottom is in. That's the number one thought right there. You don't have to really know anything else other than that the bottom is in, and it's either long trade, and the top has to hold or break out. That's it. That's all you have to know. Now, you have to know the trading rules, but of course, right? So we get going, and again, look, we get to here. All right, good job. My wife says she's done trading for the day already. I don't know what happened in there, but we'll have to investigate here in a minute. So, this is not a good top, right? I mean, I know it's divergence and the trigger's rolled, but the area that it happened from is not great. And a lot of times when you get a not great top, meaning you get a short-term top, yes. And yes, you may get a short-term short. But usually that's a precursor towards, mid-bands and fibs holding as a good bottom. Does everybody understand that? And again, it's, predominantly the trend was super strong to the upside, which you see this every day, right? And then when it's a super strong trend, fibs and the mid-bands have a tendency to hold. So you may get one short down two there, but the fact that we broke above the fibs, didn't make a good top, means that we'll probably keep going. So now look, your trade is maybe one short, sure, but once we hit the mid-band and fibs, if the triggers roll back up, you have to think good bottom. And once look, here's where the difficulty for new users comes in. You're not thinking good bottom right here, right? You're thinking, yay, I had a short, and yay, I made some money. But you're not thinking initially as a new user that the mid-band and fibs could be a termination spot. And we show it to you over and over and over, and then finally you get it. So now I'm showing it to you early, and if the fibs and the triggers, or the mid-band and the triggers don't break, it's a good bottom. Understand? And if you have a good bottom and the triggers roll, you're going to get a long trade. And when you're new, you're like, well, I can't trade that because the triggers aren't perfect. But when you change your thinking to this was a good bottom, so I can trade it, it changes your whole entire perspective. And I think this is why we need to kind of reverse engineer some of your trend trades from the termination spots, and then you'll start to see more of the high probability trades versus every little thing that's happening on your charts. I did record this, so you can go back and watch it, but the short version is we're looking at termination conditions, right? This should be a bottom. So this is the thought process. We're reverse engineering the trend trades. Instead of starting with rules and where's my trade, we're starting with this should be a bottom because of the mid-band, fibs, and triggers, and then taking the subsequent trades after a good top or a bottom, right? And again, we could even go so far, on this right here is to say this is, you can do this on your own. Not a great top. So what you end up with is not a great top, but I'll do a short anyway because the trigger's rolled, but I have to pay attention to support. And if support holds, right, termination of downtrend, then you can be more assertive on your going long. And as you work your way through your charts, again, you'll see breakouts and, I don't know if there's trades or not here. You'd have to go look at your small chart. But a very clear, when you see it, it's like, I think it's going to change the way you guys look at the charts. Instead of staring at a single instance right now on a chart, you're going to go do more of what we said in the trend trade video, which is, here's the picture of it. I had to pull the room down so you could see it. Don't worry about catching the top or bottom. That's not what you need to do. What you need to do is recognize when the fibs and divergences and triggers call a bottom and try to get the next trades going up after that holds. Does that make sense? So if a bottom holds, that's great, or if a fib breaks, that's great because it gives you something super definitive to hang your hat on. Because if you're just watching random charts out in the middle of nowhere, you don't have the context. And that's really what we're trying to do is I'm trying to build a context on, what's a good top or bottom. And again, I don't know exactly what happened here, right? It came up a little short and a very weak trigger. Maybe there was, divergence or something on a small chart. Who knows? And again, as you go back and you look through this, you're going to see, again, not a great bottom. Oops, sorry about that. Come on, Johnny. There we go. Not a great bottom because the triggers are really strong. And then usually the subsequent high, if you have divergence from resistance, is a good, when you can add divergence into the equation, talk about these little negative numbers on here, man, it really, 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 really helps. Divergence really helps, especially if the triggers are far away. And what you're going to find is after divergence from a fib and the trigger lines roll, you'll start really seeing some trades. Oops, sorry, I didn't have my screen on there. So divergence from fibs and the trigger lines roll. Again, you guys have probably seen this before, but we've been looking at this trade since 2004, 2005. It looks antiquated, yes, I know, but it's still the same rules. Fibs reached, bearish divergence is true, trigger lines roll over. It's been a very, 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 very great trade for a long, long, long time, 16 plus years. So when you look at your charts in today's environment, you're going to see this. You're going to see a fib, and then you'll see divergence. And then after the triggers roll, you'll start looking at the charts a little bit differently. And again, I don't think it's terribly difficult when you're going back and looking at it, but you have to kind of, you have to give yourself some type of look that you're going to say, this is a really good top. It's a fib area and a mid band with the trigger that's so powerful that anything that happened after this box should be a good short trade. Does that make sense? And again, look, sometimes you get into some areas where you're like, man, I just don't know, and you get a little in between, and that's okay. If you get into an in between area, you don't have to take a trade. There's no law that says you have to keep busy. Actually, there's almost an unwritten law that you must not keep busy, right? I mean, I had a guy, Mike, we worked with a long time ago, and he's like, his saying was always the same, and I thought it was great, especially since I was a waiter in my past life, right? He said, you're a waiter, not a trader. And if you just wait for the right event, you're going to end up doing really, really well. Now, obviously, look, I mean, this is one of those parabolic days. So, anyway, does everybody understand the concept? And again, we'll go find a couple trades and we'll take a look at it, but I don't want to bore you forever with video. I want you to say double divergence, pivot, stop out. So there's a good chance that if it rolls that I've made a good bottom, right? And then instead of looking for trades over here, you're looking for trades where? It becomes visually obvious on where your trade is. Yes, you didn't buy the bottom, but you still got rich. So super high probability trades after a confirmed top or bottom. Now, same thing up here at the top. What's your take on all of these red fibs, and then what happens afterwards? You'll start seeing that, as you start looking at trades, you'll start seeing where the trades pop in. Again, remember what we said about fibs with divergence? That's another one right there. You can go back and find fibs with divergence all day long, and you're going to be like, wow, that's a really powerful scenario. And you'll see this scenario a lot too. Look, this is not a really good top. In fact, I would say unequivocally there was probably buy signals that you'd be taking in here. I guarantee there's a buy signal in here that you would be taking. Now, the only thing that you can't see, when you're staring at just one chart, so you have to be, you have to kind of be fair about your analysis. The one thing that you'll never be able to see on the large chart by itself is this picture that we use all the time. And this one's in the trading trend trade video on the website. You can't see change that happens on a large chart when you're only staring at the large chart. Does that make sense? And again, we start you guys off with this blanket picture like this that says, yeah, if the triggers are going up, then you're going to go long. And then, this right here, do you see this big spot right here where they're really spread out? You would think that that's the best look on the planet, and it may very well be. But as I'm just going through the slides in the video. As you break this big space down and you actually take it down to the smaller chart, you'll start to see the change happening with divergence number 1, divergence number 2, and you depending on your fibs. I mean, look. If your fib support down here, let me see if I can draw here. If you have fib support right here that's really, really, really strong, and again, not shown, but if you have fib support that's really, really strong, you're probably going to take another trade. Does that make sense? So even though you have 2 divergences, you're probably still going to do another trade. Where you run into trouble is where you get to, again, where you get to right here. Red backgrounds with divergence is pretty much a trend ender. If you were still in it for any reason, you get another pivot stop out with the triggers crossed down, and you really have to know when to quit. Now, this would also be different if, and again, this is the dynamics of the software. Think about it from a slightly different perspective. And again, just, to be fair, we'll play both sides of the coin here. If there was a lot of resistance right here and, resistance here, then you're probably not going to take another trade here. Right? 2 divergences will probably end the trend for you if you hit resistance. If it was support, then you would probably still do another one. If it was resistance, then you wouldn't. So again, a lot of it depends on what you have up here, what you have down here, on whether or not you're going to continue taking a trade. So again, look, to be fair, when you guys are studying your charts, this is the look that you're like, yay, I'm going to win guaranteed forever. But you have to be aware of what happens on your smaller chart. Because the smaller chart, maybe it got you in, maybe it got you out. I don't know. I can't tell from this chart. Now, I can tell you one thing. Whatever happened caused divergence and caused the market to start going down. Right? So here's back to the live chart. So whatever happened eventually caused divergence, and it caused the market to go down. And look, you're going to take this short trade. Does everybody see where I'm pointing right here? You're going to take this short trade 100% guaranteed. Because you're like, yay, it's a top. And again, when you start thinking along the lines of this was not a great top, what you're going to end up with is yes to shorts, but, right, you may have to manage your position. And again, this is something that I think is intuitive once you've had the software for a long time. you can kind of feel that, it's not 100% right. And what I'm trying to do is I'm trying to quantify why this short inside of this, you're going to take it, but if you get divergence, it'll get you out. Let me show you my example one more time, and you'll see how this makes sense. So look, a not great top, but the triggers are kind of rolling over. Everybody okay with that? So we'll deal with the first one first. A not great top. And you may actually take a short trade because it's close enough and you got a couple divergences, so you're going to try it with fibs and triggers and mid bands anyway. Everybody understand that? And again, I don't think we've taught a lot of this. We've tried to teach context all the time, but now I'm really trying to make it super definitive for you. Quantify what the last top was, great or not great, because it's going to help you with your management going forward. A not great top needs to be managed, and a great top you can hang on for dear life, kind of, sort of. I mean, relatively speaking. So watch how it plays out. Here, well, what happened at the top to make it great or not? The triggers, we didn't get to a fib, we didn't have divergence, we didn't have a pivot stop out. It's kind of like okay, it might be a top, but I'm not overly convinced. This one is my idea of a great top. Triggers way down here with divergence, with the fibs, that's a good top. Fair enough? So again, look, this is maybe something that's new for some of you guys. Quantifying what happened before you start taking trades going the other way. Because it's going to change your management too. If you're in a not so great short, which I'm totally okay with, you just have to make sure that you manage, because divergence will ruin your day. And it doesn't take 2 or 3 of them, it takes 1 if it's a not great short. Fair enough? And then after a great short, right, or a great top in place, then, you really get bigger, sharper moves. Unfortunately, I didn't get a fill right here, but then you get bigger, sharper moves. And again, you'll see this in, when you look at tops or bottoms, and you look at trades like this, trade number 2 in the plan. You get a good top that's really on both charts, and then you get a bigger, sharper move if you get a fill. So again, it's quantifying what happened at the top or bottom that's going to help you out a lot. And this one did indeed, if some of you guys saw the trades, right? That thing went screaming to the downside. So again, just to kind of bring it back to here, you can do different things when you're at a great top. Learning to quantify a great top is a whole nother scenario. So look, can we just roll with this for just a second? Look, this was not a great top, but they rolled down, but you might have to manage your position. Now, before we go forward, I'm not even going to try to cheat too much. This is a potential great top. Because fibs, triggers, I mean, that's everything, right? I mean, that's pretty much the mother lode of all things pretty. And when you get that type of super look, yes, you can be much more assertive at those areas. And if you're more assertive at those areas, you get really good trades. And then the trend trades that are following a really good top have a tendency to have a little more juice behind them. So you see the difference? Not a great top over here. Yes, you get a short, but you have to manage. And then you get a really great top. I mean, this is the best top ever, if I was going to quantify it. The best top ever. And if you don't trade at the top, that's one thing, right? Some of our more experienced traders, if they get this look, they're being more assertive at this edge. What do you think? Pretty easy to see why. I mean, with the trigger line configuration, they might be a little more assertive. But even if you're new and you just say, wow, that was the best top ever, fear not. Because when you get this trade after everything rolls over, guess what happens? You don't have any issues reaching your goals and objectives for the day. I mean, that's a 1 minute trade, I guess, at the end of the day. But you get the idea, right? Once you can quantify that you've got a great top or bottom, your next trade should be really, really good. And you can go back and do this, over and over and over. Look, it's an okay top at fibs, but the triggers are a little strong. And then the subsequent top had divergence and the triggers are much weaker. Can you see the trend trade after? Look, a top, but not very strong top due to no divergence, strong triggers, right? You guys need to quantify this for yourself. It's a top, but it's not that great. And then over here, this is a much better top because we have divergence, we have weak triggers, we have fibs, and that's not your trade. That's your recognition that we had a good top. Can you see your trend trade after that white circle? Oops, I just totally messed that up, didn't I? See if I get back. There we go. Can you see where your trend trade would be? After a great top, look at this one. Everybody give me a yes or a no or a Y or a no. Divergence, weak triggers from the fibs, then you get high probability short that pays big dividends. And again, I'm not saying you can't get lower probability shorts, right? But you have to be, really in tune with, yes, it's okay, but we didn't have a great top, so it might be suspect. And then we had the best top ever, and then you get a big one. And then you get the same thing again. You get a top, but it's not great. Divergence, pivot stop outs, weak triggers. There's a lot of things that help a top. And when it's divergence and weak, the next, the subsequent trend trade is pretty darn good. Now, can we call that the edge of fibs and a roll? I mean, it looks like it to me, right? What's the subsequent trend trade? Not the low. I don't care about the low. All I want to know is a good bottom is in. Once you recognize a good bottom is in, then you can see where you get a pullback with strong triggers. That's your easier money to the upside. And you're not being a hero selling the top or buying the bottom. You don't have to. My contention is, and again, I want to take this back to, our educational syllabus first. You need to focus not only on, again, look, maybe this changes the way you think about things. In step 1, high probability patterns. Not necessarily just trades, but also high probability. It's really combining step 1 and step 2. Because I think when you know step 2, when to stop trading, which is very vital, that also will lead you into higher probability trend trades on your other charts. So step 1 and step 2 are, you kind of learn them at the same time. Jose, you can see doing that 2 times a day for $200 each. Yeah, look, keeping it in perspective when you're looking through the plan, right? and you're looking through, again, through rules and the plan. Let me quit making you dizzy. The idea is, right, that you guys are going to start with the simulator and you're going to guarantee yourself that you're going to be a winner. And then I've got another picture of this one, a little more modernized now that they have micro contracts. Because a lot of people will start off with a micro contract with, $400 or $500 in their account, which is totally fine. But the idea is that you're starting to learn the patterns first, and then you trade with a simulator. And you trade with the simulator so many times that you're only doing mostly winning days, and you're following rules and you're being consistent. And the rationale for every one of your trades is bulletproof. Once the rationale for your trades is bulletproof and your practice is bulletproof, then you can start trading, one or two little micro contracts. And if you can make $40 a day a contract, you don't have to make much money. $40 a day on a micro contract is like a sneeze in the market. I mean, you should probably make that every 10 minutes right now while it's volatile, right? So the idea is if you can make 40 a day on 2, you can make $1,600 a month. Now, you're not getting rich, right? What you're doing is you're working on the syllabus. And let me show you where this comes in. Again, the first, step 1, high probability patterns, and step 2, termination conditions. And what you'll find is once you read the fibs and triggers correctly and you know the termination conditions, then your divergences will obviously start to make a lot of sense to you. If the triggers are weak, you're going to use divergence to get out or stop. If the triggers are really strong and there's no chance of it stopping, you're not going to worry about divergence as much. And ultimately, once you get to those first few steps, you have to kind of, I would like to say, deconstruct and then reconstruct our trading plan. Because I've taught it 52 different ways and I've said it 5,000 different times. And ultimately, you have to go in at some point and kind of rewrite it and create your own plan, your financial goals and objectives, what hours of the day are you going to trade, how much time do you need, what trades are you going to take. And then, again, trading on simulator, participating in the class, finalizing your plan for trading real money. Once you're ready to trade real money, you have to put some financial controls on yourself. I'll only lose $50 a day or $300 a day or whatever your plan is. How much money do I want to make? How much money am I willing to lose? When will I stop? When will I press up? And then ultimately, look, this is where the difference is between winners and losers. Listen to what I'm saying right now. The people who make a ton of money with our software have the exact same software and education as you in the beginning. So the people that lose money also have the same software. What's the difference? The difference is the ones who win have defined the plan and are consistent in execution. And ultimately, this right here, right? Live money should mimic your simulation results. And this is a tough one because a lot of people can trade on simulator, and the minute they switch to live money, they're not mimicking their simulated results. And it's either the result of lying to yourself and doing the wrong trades, or having emotional issues. You're scared, right? Hesitant. And if for some reason live trading doesn't prove out to be the exact same as simulator, just return to the simulator and start working on your plan until you actually believe it. Somebody asked me the other day, they said, tell me when I'm ready to go live. I'm like, you should never have to ask that question. You should have so much confidence in the read of your indicators and the execution of your plan that you'll never have to ask. And if you find yourself becoming fearful when you're taking your trades, it only means you haven't practiced that trade enough. So obviously this is the ultimate goal. Confidently trading high probability patterns. And I always put this in there. Don't blow out your account while you're learning to control your emotions. Have you ever heard 90% of traders lose money? It's because they have no clue what they're doing and they get all emotional because they lose right away and they don't know why, and they end up quitting. Everybody who, follows this path, let me know where you end up, right? And this is the last thing that I put in the syllabus. Speak up. If you've actually done all these things and you're actually trading high probability patterns and for some reason you have an issue, which I've never had anybody have an issue, but if you were the first in 23 years, let me know. Generally, there's something in the syllabus that you skipped. I don't know what it is, but we can kind of help work you through what you skipped. And when you read through this syllabus, you should be able to identify any weak points that you have in there in your education. So, again, I know it sounds a little counterintuitive, but from the trading plan, I want you to start with these things. Conditions that end the trend most of the time, or termination looks. And work your way backwards through the chart and find those spots, and then the next trade that happens after those spots is going to end up being really easy for you to spot. And again, just find them first and make some pictures. And then when you start looking at the live market, you'll see where those trades happen from. So look, hopefully without too much issue, let's take a look at, today. Two divergences from the low at fibs. Everybody okay with that? I'll just start at like 9:30, so make it easy. This is a good termination condition, and if there was some type of a trade over here, it'd be okay. Now, vice versa. This is our really, really, really good termination condition at the top. Right? So, watch. Divergence from fibs. I'll give you the short version, okay? Divergence from fibs, and that's a good bottom. And then this is one of our favorites. You guys have seen it enough, right? A pivot stop out of divergence at fibs, and that's usually a really good top for us, right? Divergence from a fib is a really good top. So look at the difference here where we break down the chart, and this is an important spot because it's divergence from a fib, and what happens after it is the most important. And then when we get divergence from fibs at the low, right, not that we won't stop up here because it's resistance, but a second divergence from fibs really means something significant. So I don't know if there was a trade in here on the small chart or not. We'd have to go look at it. If there was, great. If there wasn't, no big deal. And then look, one of our favorites, you guys can attest to this, right? I mean, right out of the plan. Pivot stop out at the edge, and then shoot. What happens after it is very, very, very important to us. Because it's not just what happens at the top. It's what happens after the top. And, again, that's a good spot. I don't know what trades were available on the smaller charts, if any. And then we go down and we make a pivot stop out at the bottom, which is great, right? But the triggers aren't such that we're going to buy, are they? So it's a pivot stop out, but it's not a great bottom. Because the fibs and triggers say that the top is much better, isn't it? When you're looking at your trigger lines. So it's what happens after this top that's going to be more important to you. Now, as we progress forward, just quick pick off here. Tell me if I'm off base on this, but this is really easy to see, right? Divergence from multiple time frame fibs. That's pretty much the mother lode for us if we're going to call a bottom. And it's not the bottom that counts, it's what happens after the bottom. Does that make sense? You don't have to catch the bottom, you just have to recognize the bottom. Because then, I don't know what happened on the smaller charts once things roll, right? Whether you get a trade here, you obviously got a trade there, and vice versa. Look at the top. Pivot stop out with divergence at the fibs. You know what we say about that, right? It's not what happened up here, it's the next short trade after the top. Notice that the triggers the second time are below the large triggers, which makes the pivot stop out better, plus there's divergence. Let me show it to you this way. Once you recognize that top, do you see where the short trade is? I bet you do. The short trade is after the triggers roll. Where is it? Well, somewhere in here. Now, how far is it going to go? I don't know, but you only need a couple of these. Think about it. You only need a good top or a bottom, and then one or two of these for $200. Literally, one or two of those for $200, and you make $400 a day. I challenge you to go find all of those things. Find the key tops or bottoms, and then what happens afterwards. And I think you guys, instead of just looking for random trades out in the middle of nowhere, will start to focus in a little bit better on, a nice clear plan for what to do. All right, now I need to put my toys back together. I'm going to finish this recording because that's really all I wanted to record for you guys. Again, look, syllabus, trading plan, trade video, how to do market replay, basics in here if you need it, and then some additional educational recordings right here. Everything you need to be successful is on this page. So if you have questions, ask, and if not, I appreciate taking the time to listen to this.